Hello and welcome everyone. My name is Daniel and today I want to take a look at specialty chemicals sector and in particular LyondellBasell industries. Normally I do my analysis in a long post and with a lot of images and things, but today I wanted to do something different and let me know if you find this format a bit more interactive or if I don't go into depth enough with this, as I'm restricted to everything that I can say, and I will show images and some numbers, but it will be a bit different. But I hope this format is a bit more easy to understand and maybe more interactive as well, so you actually can see and hear me now, which is a bit different, a bit of a difference. So let's just get to it and let me know if you enjoy this. Okay, so when I look at a company in general, I look at, okay, what do they do? How do they actually make money? Are they actually making money? Their fundamentals also are important. Are they making money? Do they have a moat, as Warren Buffett would call it, or a competitive advantage? Is there something else that makes them stand out from their competition, or if it's just a high quality company in general? And am I paying a fair price for this company, or a better price even, or it might be overvalued that compared to its peers in the specialty chemical sector, and that will try to figure these things out and hopefully present to you how I, in general, do a surface level analysis on these types of companies, and maybe that helps you as well. If you have any questions, feel free to ask them. Well, let's just start the LyondellBasell. It's important to understand what they actually do. I already said it's a specialty chemicals company, but more specifically, LyondellBasell produces olefins and polyolefins. That's their main line. Those are their main business lines. Those are basics for plastics. Plastics are used in their plastics are used in a variety of things, from healthcare things to packaging for meat and food to other things. They also have additives and advanced polymer solutions, which, for example, are used on cars and whatnot. But they also have a refining business, which you might find interesting. It's not that far out of the question. Yes, they already are dealing with petrochemicals from making their plastic things, the olefins and polyolefins, but they also have a refining business that this helps them in hedging a bit against too high commodity prices, as they don't produce any oil or gas, they only use it, and that's an extra risk which they kind of hedged away a bit with the refining business. They also have a technology part, but that's so small, it's not that important in my opinion. Their main line are olefins and polyolefins. And well, how are these business segments actually doing, you might ask? Well, let's look at how the trends are in this industry. This is taken from their latest quarterly presentation. For if you want any nice visuals of a company, just visit all their quarterly presentations. They always have nice things there, but here they pointed out, okay, the underlying industry is recovering. They, as you can see in this nice graph here, that especially plastics or polymer demand, it was a bit suppressed during COVID. They were hit quite hard. They wrote down a lot of assets as well, but now that COVID is coming to an end, they have seen. I think you can see my mouse, and recovery in that. That the recovery kind of already happened here partially, and you might also say for some segments there's some growth, but these are necessarily these are their not what they produce themselves, but whoever buys their products, like the light vehicles or the consumer packaging goods. Those are the end users of their products, and those seem to be recovering, some slower than others. This might also prove an opportunity if you think that it's gonna recover faster than expected. That might be something which is interesting. But I'll go with the base scenario here that LyondellBasell expects, as this seems quite reasonable. That it recovers and just continues to grow a little bit. But this might come hand in hand with operating rates, which are continually getting higher and higher. Saw this with some unusually high demand recently, but we have to see if that stays. I won't bank on trends too much, as I really like to just get into the numbers. LyondellBasell, what stood out to me, and you have that with other material companies as well, they are just really good at generating cash. 78% of operating activities turns into cash. That's a 78% cash conversion rate. I absolutely love that because you can't pay bills with profits, or you can't pay dividends with profits, or whatnot. You need actual cash to do something, and they're making a lot of it. So paying some of that back as a dividend, but they're making a lot of cash, and the all increases in revenues and stuff just result in a lot more cash as well. That's why this is a bit of a more cyclical company as well, but that's something to mention. But cash, or the free cash flow, so has been improving since 2020. As we can see, 2020 was a really bad year, unsurprisingly, but you might also notice the years before also weren't too good growth-wise, but it is expected that they at least return to 2019 levels and then continue to grow. And I believe that they are able to do that, but it's yet to see. They're continuously investing about $100 million in R&D, research and development, and this has proven well so far, but we have to see if this is enough, as they do have some competitors, especially in China, which are able to produce at a lower cost, but it's to be seen if they have quite a good position, as they operate at 10 to 12, 20% EBITDA margins. That already indicates there is some moat there, otherwise they wouldn't be able to charge such high margins or profit margins. And that's something that interested me. So who is actually leading this company? We have Bhavesh Patel, or just Bob Pato as he calls himself on LinkedIn. And Bob, let me just look it up quickly, has 6.5 years of experience as CEO, has already been with LyondellBasell for 11 years. He has 20 years of experience at, what's it called, Chevron Phillips Chemical Company, which he also worked with olefins and natural gas liquids, which are used as a feedstock within LyondellBasell. So he has a lot of experience with that. He has led the company for quite a while, although the growth hasn't been that good under him. That was quite late economic cycle. We have to see, especially these kinds of companies tend to do well during more inflationary periods, and I think Bob Patel can execute on that. He seems qualified to do so, at least in my opinion, and if you don't think so, let me know why. Didn't find anything too out of the ordinary with him. But the other most important person in this company, in my opinion, is Kenneth Lane, or Ken Lane, as he calls himself. And he is the executive vice president of global olefins and polyolefins. So that's their largest business segment. That's why I took him out of the bunch of management and put him here, as he is, together with Bob Patel, is responsible for basically the entire company. You also have the CFO, of course, but there I didn't find anything too interesting or out of the ordinary. Kenneth Lane has quite some experience as well, although not with LyondellBasell. He's quite new. He only has been there for 2 years, which is something to note. That since he is there, LyondellBasell has been working more with joint ventures in China, so he has tackled part of that competition that way by just working together with them and licensing technologies, which might or might not be a good decision. They get money for it, but of course the joint ventures also get some technology leakage in that way. He has quite some experience. Let me look. 13 years of experience with BASF, that's a German company, and 8 years of experience with British Petroleum in the petrochemical segments of BP. So Unsurprisingly, they have quite qualified people at the top, and the rest of management seems quite similar qualification-wise. So, in my opinion, nothing too worrying or too special. Bob Patel seems like a fine guy, but he doesn't seem like your superb management, like your Mark Zuckerberg or Jeff Bezos. But he seems quite qualified. But okay, yeah. So we have so until now, okay, we have some nice numbers. There are they have nice margins. They can generate a lot of cash. There are some underlying trends. But what am I paying for this? And here I put a nice Warren Buffett quote: "As valuation is always important." Though this is less of a valuation quote. But here are the cold hard numbers. 6 forward EV/EBITDA. Why EV/EBITDA? I find that EV enterprise value is a more accurate metric for a market cap, as you take out your cash and put them back in the debt and get what the enterprise itself is actually worth net of debt and cash. And EBITDA is just a measure of profit or cash generation, just as free cash flow. But a forward EV EBITDA of 6, that's quite low. Like normally with some companies you see in the 20 to 30s, this is 6, that's quite low. And even within this sector, as we'll see in the next slide, forward EV sales of 1 to 2, that's it's quite cheap, not super cheap in my opinion, but it's quite cheap. And a forward levered free cash flow yield of 13%, which is really this is what got me started on this company, like this free cash flow yield. That's really juicy. But yeah, 13% is quite high. Anything in double digits although in some sectors it's easier to find than in others, but above double digits, that really interests me, as that's quite a nice free cash flow yield. Do keep in mind these are forward numbers, so for expected for next year. But I only look at forward numbers, as I find that the past is a bit deceptive sometimes and doesn't take growth into account, which forward partially does. Here is all their competitors in the special, or not necessarily competitors, but peers in the specialty chemical sector. And like LyondellBasell, that's LYB, Linde, that's the specialty gas company, that's the largest in the sector. Albemarle, Ecolab, PPG, Sherwin-Williams, and Evonik, that's a German specialty chemicals company. And out of these, currently own LyondellBasell, Ecolab, and Evonik. And as we can see here, forward PE, you've noted I personally don't really like to use PEs, but you might be more familiar with it. Here you can see PE-wise, LyondellBasell and Evonik just seem really cheap, and while Ecolab and Albemarle just seem quite expensive. Sherwin-Williams also not looking too cheap, and Linde as well. Only PPG, LYB, and Evonik are trading below market. And forward EV/EBITDA, which is basically trying to measure the same thing, but just with other numbers, I trust forward EV/EBITDA more. It doesn't really change the picture here, as it doesn't make PPG, Evonik, and LyondellBasell look quite attractive, especially LyondellBasell and Evonik. And forward EV sales, nothing too out of the ordinary. Although Albemarle, Linde, and Ecolab seem quite expensive, the others seem quite normal. And cash flow yields, that's my favorite number here. 13% for LyondellBasell, 7% for Evonik. That is just really interesting for me. Why do I own Ecolab if its free cash flow yield is only 2.4% and all the other numbers value-wise also look quite bad? Well, I wanted something more stable. Ecolab is quite a stable company, and you do pay a premium for that, and quite a premium. So Ecolab definitely isn't a value stock. Well, LyondellBasell and Evonik, you would be able to call those value. And Albemarle also is quite a growth name in the specialty chemical sector, but in my opinion, a bit too expensive. And there wasn't any free cash flow yield, as it was negative, and I didn't find it useful to list negative numbers. That would be a bit misleading, I think. Although the free cash flow yields are as expected to be negative, but that I'll just put not available here, as that doesn't really help you with any analysis. Well, did I leave anyone out? Because you might say, okay, you might cherry pick some companies to make LyondellBasell look good, and Evonik as you already own it. But this is the entire specialty chemical sector in the S&P 500. And I looked at all, I listed all of them except international flavors and fragrances. I just don't find it that comparable. The others, it's already debatable how comparable they are to LyondellBasell. They're all specialty chemicals, but the thing with specialty chemicals is, yeah, they're all specialized in certain sub chemicals. So Ecolab does way different things from LyondellBasell, just as Linde does specialty gases, where Ecolab just things with disinfectants and food and cleaning. That, yeah, I wouldn't compare the base fundamental values of those three businesses, but I could compare the valuation. In my opinion, that is, it's fair to leave international fragrances and flavors and fragrances out, as it's just not too. It's too different, in my opinion. But okay, so what would I conclude? I don't think you can see the bottom right part, but in my opinion, LyondellBasell, it has strong supporting trends for the next couple of years with the recovery and some potential growth, but it's to see how that turns out. And potential weakness, of course, they are really volatile in earnings wise because they rely on commodity prices, which are quite volatile. Oil has been doing quite well, as you might have noticed recently. Natural gas, which is a large part of their feedstock, also has been increasing in price quite a lot last couple months. And this might prove a bit expensive for them, although they hedge away a certain volatility, but if prices overall just increase, this also might lead them to have higher costs. A part of that, or maybe more than a part, they can pass on to their end users, as they have quite some pricing power, but it's a risk. And in my opinion, there's quite some opportunity here with those recovering trends. It might turn out quite a lot better than expected, and it's just really cheap at EV/EBITDA of 6. Let me show you the thing again. EV/EBITDA of 6.7, and the free cash flow yields of 13 and 7 for Evonik. That just seems really cheap. Or EV/EBITDA of 6, I mean, not 6.7. That just seems really cheap, and in my opinion, a great buy at these prices, as I do expect it to return to a bit more of a normal valuation in line with its industry. For the Evonik, the same. Evonik is less of a has less growth potential, but it's a bit more stable, and also has some recovery story behind it. But yeah, that's why I think LyondellBasell is a good buy, and I will continue to add. I already have a position in it. I will continue to add to that position as long as I find it attractive at these prices. If nothing changes, at least fundamentally, so that can always happen. And I would like to know, did you enjoy this? And if so, let me know, and I'll see if I'll make another video or analysis in video format. That one will be a bit longer, a bit more in depth. It was more of a surface level analysis on LyondellBasell, so I didn't go into any DCF calculations or in depth look at the business. This is more of a surface level, and looked at the business lines and things, everything that you would be able to take from a quarterly presentation, and that's next one up will be consumer staples, and that one will be an in-depth one. So